Welcome to the Daily Update. This is being prepared Friday, May 13th, where we'll look at the action in the market today and then see how things look for Monday, May 16th. And it was a pretty positive day. However, it was an oversold bounce if there ever was one. The markets are getting very fearful from a sentiment standpoint, very oversold with a lot of our indicators. The VIX had really been calming down. And so to see the bounce that we saw on Friday was not necessarily a surprise. However, can it continue? Is this the start of something? Or are we just waiting for things to wear off their oversold condition before we get set to go even lower from here? That's the question we're dealing with right now and trying to figure out on a day-by-day basis. So just to go back over what happened on Friday, right at the open, we gapped higher to about R1, which was at about 39.77. We saw buying that took prices up to R2 at 40.23, so we regained the 4,000 level, and we went slightly above R2 as well. As the day went on, prices drifted and fell back close to R1, which now acted as support. Going into the close, we saw some more late day buying that took prices back above R2, and then we ended up closing right at R2. We ended up being up 2.39%, a pretty solid, healthy move. But we have a lot of work to go if this market's really going to turn around. Volume was actually below average, and that's one of the things that the negative folks are probably going to dwell on. We had been seeing above average volume, especially on down days. Well, we get a bounce day on Friday, and volume really drops off. That is a bit of a warning sign. But if you look back to the last middle of March, going into the end of March, the nice run-up that we saw, a lot of the advances that we saw were on below average volume, which after that you could say, no wonder we fell after that. But at the same time, there was a real stratospheric move back in the middle of March that if you got in at about the right time and got out at the right time, you probably saw some really healthy returns. The technicals are still negative, but we were oversold and we've now bounced a bit from that oversold condition. We could still continue on from here, or is this a dead cat bounce? Inflation and interest rates are still really the concern right now, specifically inflation. One thing that was really different about this week is what we saw on Friday, interest rates and stocks going in the same direction. And we've been seeing that a lot this past week. Usually they've been going in the opposite directions of each other. We also have the big geopolitical concerns that I'll mention and go through more towards the end of the video, and then earnings as they come out. What are some comments that we can make? We were able to regain the 4,000 level after being oversold. Interest rates and stocks rose together that I just mentioned. On Friday, Fed Chair Powell came out and there was some other FOMC voter that indicated maybe they're interested in a 50 basis point rate hike at the next two meetings. This is at least stating what they've already planned to do and what they've pretty much have telegraphed to the markets. So the fact that based on recent data, yeah, it's been strong. Yeah, it warrants rates being hiked. They're not necessarily deviating from that plan at this point. And the markets took that as positive, which it wanted to take things positive on Friday, and that's partly why we saw a pretty strong bounce. The US dollar continues to be above the euro. Technicals continue to show some improvement, and I'll go through some charts. Fear is still extreme. We were really extreme after Thursday. Well, now we're just back to pretty extreme. We're still in correction territory. The economic report that came out, this is not necessarily positive. The preliminary consumer sentiment report came out at 59.1. They had expected 63.5, so it was a lot lower than expected. Sentiment, this is how are people feeling. And last month, we had 65.2, which was better than the month before that, but still quite low. We were up in the 80s to 90s about a year ago, and think about what things were like then. People are not happy about the future right now, and I have a chart that I'll go through and show that. And it just shows that sentiment is really going down right now. The trend is still negative and getting stronger. The big bounce up really didn't do much to change that. I switched the bias more over to mixed. I'm still thinking that maybe this is a dead cat bounce at this point. I'm willing to change that stance if we see some follow through. That's really what it's going to come down to. The momentum overall still continues to be negative. We don't just take one day and switch the whole momentum unless it's a real strong gain. And yeah, it was up over 2%, but not the real gangbuster strength on high volume that we really want to see. Let's go back and look at the day's session. Based on sentiment, we were at 6 the last time I posted this, but we're still in extreme territory right now. And here's just the historical chart, which shows where we're at. And this quite often will mark significant lows in the market. Then here's the sentiment chart that I was talking about. The red line is how interest rates are acting. That's the 2-year Treasury yield. And it's really been spiking up, starting out back in 2021 and continuing until now, even though they declined a little bit on Friday. The blue line, this is how people are feeling overall. Do we want to see them trending higher? Well, that's not what we've been seeing lately. We've seen it really fall, going into the COVID plunge, it bounced back slightly. And then lately, especially going into 2022, it's really been coming down. And we're at 59.1 currently. And what we're seeing down on the bottom, this is the spread or the difference between the 2-year Treasury yield and consumer sentiment. And we're really going negative. And one of two things will typically have to happen. Either people are going to have to get happy or interest rates are going to have to go down. We can stay in this kind of a situation for a while, but eventually something's probably going to have to give. Looking back from 2011 up through about 2018, you can have rising interest rates over a period of time and people can get happier and happier. This is when the economy is growing. That's not what's happening right now. We're faced with a lot of headwinds in our economic dreams and how we feel about things that we weren't necessarily dealing with a few years ago. So this is why people are more pessimistic about things right now. The VIX really declined. Looking at the line chart, it really fell big time. And then here's the bar chart. It gapped lower and ended up closing right at the lows. The VIX of the VIX also really declined on the bar chart and declined enough to actually go below the moving averages. Then the Ulcer Index did actually increase a little bit on Friday. So fear is still pretty heavy in the markets and kind of at an extreme level. We can see that also with the more historical look at this. We're at a pretty high level right now. The put-call ratio based on one day, it really fell, which should not be a surprise because on up days, that's when people are getting rid of their puts because now they start losing money. Then on a 5-day basis, we're still pretty high, but we're coming down slightly. I didn't include this in Friday's video. The active asset money managers, they came out with their weekly survey, and I went ahead and put the date on here. It came out on the 11th. I give the number right here. It's at 24.31. Down below, this is the S&P 500. And it really shows how there's been a decrease in risk exposure. And these guys are human beings. They'll do things to the extreme too. When everything's falling apart, they're willing to dump the assets in their mutual funds or their hedge fund or whatever they actively manage. When things are going really well, they're willing to pile in to the more risky assets, which means stocks, and this line will really go up. So right now, we're showing a pretty extreme negative reading. Is that an indication that maybe we're at some kind of a bottom? When you take this measurement tool and compare it with sentiment, with how people are feeling, and there's even another chart that I have after this that also shows these things, yeah, we're getting pretty extreme right now. This is more the critical mass that we've been looking for. This, and actually this was from Tom McClellan. He is a daily and weekly newsletter publisher. And his parents were the ones that invented the McClellan oscillator. And then which goes with that is the summation index. This he got from somebody else, from Investors Intelligence. And this just measures the percent of bears that are in the market. And these guys are really good. Investors Intelligence is a really good company. They're showing a real extreme reading right now, back at COVID level type fear. This also points to fear being pretty extreme right now. We also had the AAII survey that came out, and it's still extreme negative, even though it came up slightly. from the previous week, it's still very, very extreme, which could be a positive signal. Then looking at the Ridex bear bull ratio, it declined a little bit, but we're still spiking up. Then looking at the risky loans versus the not as risky loans, yeah, we are still starting to go up, but we're not spiking up like we did back in the COVID plunge or in the financial crisis or in the recession after 9/11. But we do want to keep an eye on this because this can spike up if things really start to turn bad for the economy. Looking at inflation, here's the CRB. It was up almost 1.5% on Friday and is still in an overall uptrend. And this is where a lot of the inflation justification that I get by watching this index. Gas is still going up quite high. It's starting to spike at 3.78. Heating oil, not as high as it was before, but still quite high. Fertilizer, we haven't looked at that in a little while. It really spiked up. It's coming back down, but it's still very, very high. And this is the real foundation of what we need for the food that we need to consume. So if it's costing more to buy fertilizer, that's eventually going to find its way all the way down to the consumers. Also, this is a new chart that I watch every day, but I haven't included this in a while. This is the 5-year forward inflation expectation rate. And basically, just to break this down and make it simple, this is based from right now. What do folks see inflation being 5 years from now? It had been going up pretty high, but it's really starting to taper off right now. When it does really fall off, this is typically when we're in a recession, back in 2020, back during the financial crisis. But it had really been spiking up big time. So the fact that it's coming back down could provide some short-term support because that means interest rates are coming down. If interest rates start to fall, that could really light a fire under the stock market. That seems to be what the markets really want right now. Except in the past week, interest rates and stocks have been going in the same direction. We'll have to see if that relationship will get more in balance based on what it's been historically in 2022. Looking at the sectors, the sector that performed the best has been the one that's in last place, is discretionary. It was up almost 4%. Energy, which continues to do well. Tech really bounced. None of the sectors were down. The ones that did the worst were healthcare, up 1%. Utilities, up over 1%. The financials, up almost 1.5%. So it was a solid across the board good day. And here's going back to the all-time high, where energy's doing the best, followed by utilities. And even with the advance on Friday, discretionary is still in last place, followed by communication and tech, with financials and real estate not too far behind. Technical alerts, mostly positive. I'm just going to focus again more on the S&P. We got back above 4,000. A lot of these were triggered in the NASDAQ and in individual sectors. This one near the top, and I have a chart that I'll show of this, where the BPI, bullish percent index, it had dropped below 30. Well, now it's gone above 30, and now that is an official oversold reading. And that could be positive for the markets. Intraday, let's go back and see what happened. We gapped up, and we gapped right up to R1. And then buying ended up taking us to R2. We actually broke a little bit above that. Trailed off as the day went on. We actually came back down to R1, which we didn't get quite there, but it was acting as overall support. We bounced up out of that and ended up closing right at R2. Looking at our daily chart, we have not regained the long-term support yet, but we've still maintained a position above S1 on the daily chart. And you see how volume really dropped off on Friday? So that's a bit concerning right there. Looking at possible areas of support on up days, we don't have to really worry about that as much, but we still want to look at this chart, even though it looks like a machine gun went to it here. We're down 16.11% right now from the all-time high. Technical overview, we are positive. Nothing's changed here, even with the update. Energy still positive, the commodities, gold, interest rates, and staples are still leading the markets these days. The things that are negative, and I'll just keep clicking off this whole list, even with the bounce, all of these things still remain negative. Like ARK had a good day, but it's got a lot of damage. Bitcoin is not doing so well these days. The last time I checked, and as of the time I record this, we're under 30. We even got into the 29s and 28s. And then bond prices still are really just struggling, both Treasury and corporates. Looking at our trend, the ADX, it flattened out a little bit, but it's still above the moving average. So I consider that as still strengthening. We saw a little bit of a decline in selling, a little bit of an advance based on buying, but this isn't really going to change until the green line and the red line cross each other. Our Arun really didn't change all that much. It's pretty much flat to a little bit of a bounce, but it's still showing that sellers are in control. Buyers are not in control. They're on the bottom, and the oscillator is negative and well below zero right now. Breadth, we saw a really powerful update. A lot of advancing issues based on price and a lot of advancing volume. But we're still negative overall. We need to recapture this moving average and really start to go higher. We bounced a little bit up based on volume, but we've got a lot of damage still left to repair. Looking at the new highs and new lows, we had been getting extreme. We bounced back up and we're more into neutral territory right now. The 10-day average of new highs and new lows, it's still pretty extreme negative, even though it did bounce up a little bit. And this could be providing at least some catalyst for a bit more of a bounce because it's so extreme. The advanced decline ratio, the reason I bring this up, this is based on just one day. We just spiked up with the heavy volume and we're already extreme positive when you compare Friday's action with Thursday's action. The advanced decline ratio, it did turn up slightly, but it's still below zero. New highs and new lows. This thing is really trying to turn up here. We saw that really big expansion of new lows, and that almost seemed extreme. Well, we didn't see that on Friday, and we saw just a little bit of an advance in new highs. So the 5-day simple moving average is trying to turn, where the 10-day, it's probably hard to see, but it just ticked up slightly. Accumulation distribution is showing some improvement, but we're also below a declining moving average. Short term, rate of change based on 1 day, we shot to the moon. This thing will readjust after Monday, so it doesn't necessarily mean we have to be having a down day, but it just might mean that we'll settle down a little bit. Rate of change on 5 is bouncing after showing an extreme negative reading. And then the McClellan oscillator, we bounced up after having an extreme negative reading, but we're still below zero. And whenever we're below zero, that means the summation index will continue to decline. The force index also bounced up slightly. It's really hard to read this, the way they draw the chart here. So that's why I put the little circle in there to show you the closing value. The Stoke Rsi is bouncing up after being extreme negative, as is the Williams %R. Then the 20-period EMA study, we're bouncing after being extreme negative. Same thing with the 50. We're starting to turn up a little bit with the 200. So see how things are getting a little better? The short-term stochastics also trying to bounce after being extreme negative. Still turning up, but haven't crossed back above this line yet with the intermediate term and just ticked up slightly longer term. We're going to have to see more than just 1 day for things to really turn around. 5-day of moving average highs and lows, where we had been extreme negative, well, we just ticked up a little bit. So we're still pretty extreme negative. Intermediate term, the rate of change based on 20 periods, we're still extreme negative, but trying to bounce up. Looking at 50 periods after being extreme negative, we are bouncing up. The 10-day standard deviation, we are pretty much flat, and this means that we're just kind of far away from the standard price. All of the oscillators, although they ticked up slightly, are still negative overall. The Sean trend meter is trying to turn back up, but is still extreme negative. The STO, based on price, is showing an advance as well as a little slighter advance based on volume. Here's the BPI. It had crossed below 30 and then bounced back above 30 on Friday. So now that's an official oversold signal, which quite often can be a positive thing for the markets. Here's the longer term view of that chart. The PMO, still negative based on price and volume and overall. The studies inside the PMO, we were extreme negative with those PMOs that are rising. We've bounced. The buy signals trying to bounce. Those that are above zero, flat to trying to turn slightly after Friday. The CCI and 14 periods coming out of an extreme negative reading and almost out of an extreme negative reading on the CCI 20. The boom indicator, we're seeing a bit of a bounce, but we're still pretty far extreme. We're still looking more negative when you compare it to the 200-day moving average. Again, we're going to have to see more than just one day. RSI on 14 periods turning up slightly. We did go a little bit extreme negative on the RSI 9, and we're starting to bounce slightly from there. Chaikin oscillator turned back up. Summation index, this comes from the McClellan oscillator. Yeah, it flattened out a little bit, but it's still declined, where this is also sometimes a leading indicator. We saw an actual uptick based on volume. The ease of movement, 14 periods, which had really gone extreme, saw a nice bounce on Friday. The rate of change 50 after being extreme negative has bounced. Looking at the TTM squeeze, the line in here was more faint. It's not as a dark red. So it's still negative overall, but looking at this anchored moving average, we were able to get right back above it. Longer term, we're still pretty far extreme with the TTM squeeze indicator. Our different charts, Heiken Ashi is now showing an open candle, which is positive. Renko still continues to be negative. Kegi chart is still negative. 3-line break continues to be negative. So again, not a lot has changed in that regard. The Elder Impulse has switched back to neutral for the S&P and neutral for the spiders. The SAR system continues to be negative with the dots on top. We're still in purple rain territory even with the bounce, with the go, no-go system. Long term, we're still way below the 200-day simple moving average. We're turning up with our moving average study based on 50 periods, 150, as well as 200. So we need to see some follow through here if this is really going to get some legs behind it. Rate of change 200, turning up after being extreme negative. This is a longer term view of that chart. Rate of change 250 just shows that we're negative, and here's a longer term view. This is a very long period chart here. Special K continues to decline. Looking at some other markets, the diamonds are now back to neutral. The Qs are back to neutral. The Vixen really saw a decline, looking at the bar, where we also saw a decline with the line chart, which measures the closing basis. Broad markets, the dollar retracted about 0.25%, still doing very well at 104.62. It's still above the euro right now. And here's the weekly chart. Since we finished out the week, I figured I would include that. Oil also went up quite a bit. There's a renewed demand based on some things going on in China, and that is pushing oil prices higher. Gold is still having a little bit of trouble. It continues to fall below the 200-day moving average when looking at the futures contract and looking at the ETF. Even though this was kind of up, we had to open over on the left and we closed over on the right. It gapped so much lower that it ended up declining 0.81%, and we're well below the 200-day moving average now. And here's the longer-term look at the gold ETF. Silver also getting hammered, even though it was up 1.57%, but we really gapped down. And here's the longer-term chart of that. It's been really hard to get a trend going with the precious metals these days. The world markets, it's been a while since I brought this up. China is just kind of in a mess right now, trying to figure out if it wants to go higher or lower. But pretty much, Europe is kind of going sideways where the emerging markets are declining. Japan and the US still continue to be in downtrends. Bitcoin, I talked about this chart more ad nauseum in previous videos. I'm not a Bitcoin investor myself, or even a trader in it. I just find it interesting to watch. But there's some really interesting chart formations that are happening here. And this just shows how we've broken down through some support. And now we'll see. Are we going to go down from here, or are we going to see this influx of buyers that can actually save prices from going a lot lower. Bonds are still having a lot of trouble based on price. The Treasury yield, we're backing off of this overhead level that we were getting close to earlier in the week. 30-year yield is still dancing with the 50% retracement when you go back the 2007 highs down to the 2020 lows. And we are showing a real retracement right now. Longer term yields really advanced on Friday after declining a number of times during the week. And even shorter term also saw an advance. Here's the Japanese yen continues to be showing weakness. The euro is showing weakness. And the dollar has been showing some strength. And here's the euro closed at 104.13. The dollar's at 104.62. So they're just about at par. So it might be a good time if you end up wanting to go to Europe. I have to confess, I haven't really kept tabs on the British pound if you want to go to England. Looking at international yields, the US is the green. They're higher than anybody else has them in the world right now with their 10-year bond. What I'm really watching is the red line, the Japanese yield. Intermarket analysis. I usually try to show this chart after the Friday session. Oil has been doing the best. Then after that, it would have to be the dollar, believe it or not. Gold is now starting to go negative over the last year. We're seeing a bit of a turn up, but we're still negative with the S&P. Bond prices have just been really hit hard. Our possible positive scenarios. We saw a little bit of a spike up here, but we need to see something that looks more visible than what we're seeing right now. And again, what I'm trying to see here is if we see a spike in this ratio, sometimes a few days after that, we will see a spike in the S&P 500. We did see that in the middle of March. We're waiting to see if we're going to see that now. Then also, 2-year Treasury yield. Yeah, it was down a little bit, but we're not really sure if it really spiked. When this tops out and starts to go down, this quite often produces a short-term, really explosive upside possibility. Well, we don't know if we really topped out at this point. Same thing with the staples. We just continue to spike higher, even though we were down a little bit on Friday when we look at the ratio. Other times when this spikes out has marked a bottom in the S&P, which provides a little bit longer term buy signal for the S&P 500. So what's our outlook for Monday? The technicals are negative, but they may be improving. The markets are still below that intermediate, now I'm calling it long-term range. We've been in it for all of 2022. The battle between growth and value continues on a day in and day out basis. The economic reports coming out on Monday, there's a couple of them, but they're not really the biggies that are really going to have an impact. Geopolitical events, Russia, Ukraine, that can always have an influence, either positive or negative. My understanding is they're thinking of lessening some of the lockdowns in China, and that could help ease things a bit. Inflation and interest rates continue to be the real focus of the U.S. markets for right now, but we want to keep an eye on oil. Earnings can have an impact on things. The Fed folks, as they go around and talk, they're quoted one way or the other, and then we want to keep an eye on what's happening in Japan. So what are our scenarios? We're still down overall, even with the bounce. If we see rising interest rates and stocks really react to that, that's why I have the question mark at the end. And then this renewed fear of inflation that seems to be a little bit subsided for right now. But this is really short term, like 1-2 days subsided. Any earnings or Fed speak that the markets take as negative, and this can also work in the positive direction too, but I'm focusing on the negative scenario. The technicals are negative, but might be improving. What can make the markets go up? Can this oversold bounce continue? We're still pretty extreme when it comes to sentiment. That still could provide some fuel for things to go up from here. The positive scenarios, none of them really apply right now, but they might be setting up. And the technicals, we want to watch different pivot levels, either to the upside or downside, as well as previous levels, which may provide support or resistance. Our sideways scenario is really not in play right now because the ADX is above 20. It's still strengthening and showing a negative trend. So our conclusion then is the S&P is negative overall. Short term, negative and oversold, but it might be bouncing. Same thing for intermediate term. And then long term, we're negative because we continue to be below the 200-day simple moving average. Thank you very much. Have a great weekend. And I'll prepare the next video after Monday's session.